All right. Hello, everyone. Hope you're doing all right. And welcome to this MMP session. We are going to touch on a few things. And what's up, Dimitri? What's up? What's up? Beautiful drawings. And we are going to be touching on how we can get to a low resistance liquidity run. We are going to be touching on filtering process and a bit more advanced filtering process. So this Zoom will be a lot of information, so please do take notes. And again, if you don't feel like you're ready for this just yet, then you're not ready and you need to wait a little bit. That's perfectly fine, no worries. All right, let's dive right into it. So as you can probably tell right here, I have divided every day with the lines right here. Now, this is not necessarily to show you the weekly profile or anything. This is to show you on the left, the news. And you can probably tell on the days that there was news, those days are where your low resistance liquidity runs are. So let me just touch on this trade a little bit before we start, because this trade right here, this hit take profit, but this trade, this trade I closed fully. I'm not holding it over the weekend because the risk is too high for me if I do like to hold. Even if I'm break even, you don't know what the market will do in the weekend. If a war starts, of course, the odds are very slim. But if there's something crazy going on in the weekend, I do not have any control whatsoever. So I close my trade fully going into the weekend. And you can leave a little bit of a percentage running, but just make sure you don't leave your full position running going into the weekend. Of course, if you're trading prop firms, it's a little bit different. But if you're trading for investors on your own money, then don't risk that money going into the weekend. All right. So let's keep it here for now, because I'm going to talk about that as well. Now, we are going to be very advanced in picking a pair we are going to trade. And the first thing we are going to do for our filtering process is by looking at the economic calendar. So a lot of people will tell you, use the economic calendar as your roadmap. It's your roadmap. It's your whatever. And that's exactly what we're going to touch on here. And news, why do we focus on news, and how can we actually get to the low resistance liquidity run using news, and what does it tell us, etc. Well, news is what, right? News is volatility. That's all it is. So it's like a kill zone, but maybe I would argue even faster than a kill zone. So I would argue news is more important than a kill zone. As you may have noticed, I personally, if I'm being honest, I like kill zones, but I always feel like they are not everything. As in, they are not as consistent as I like them to be, and that's what you'll hear me say a lot about kill zones. And I personally prefer news over kill zones. So on the day of a news event, the big institutions usually already know what the result of news is. So that indicates news, the day news will be released. So as you can see here, Tuesday, Thursday, Friday, those are the days where the volatility is going to be. So your process of getting to a pair you are going to trade in the coming week will be, and of course, if you're not ready for this, then don't do it. But the process I use is, the first thing I do is take a look at the economic calendar, which currency has the news drivers this week. That currency is the one I want to trade. Now I'm using my FX book here. Mostly I use Forex Factory, but my FX book has more news drivers, as in Forex Factory doesn't show everything. So your process will essentially be news driver, find the weak and the strong pair. Then when you've found the weak and the strong pair, you look for a draw on liquidity on that pair and find a clear draw on liquidity. Of course, that's the filtering process as well. We need to have a clear draw on liquidity, and then we wait for that volatility on that day, and that day is the day we are going to trade. So right here, you could have traded Tuesday, Thursday, and Friday, but there's something else. There is a list, there is an order, a hierarchy, just like we have the hierarchy on the PD array matrix. There is a hierarchy of the volatility in the news events. Now, I'll share the list afterwards. I'll share it below this video. And the list is as following. So first we have interest rate decisions and red speeches. So that's FOMC. Then the second one is NFP. Then the third one is inflation. That's CPI and PPI. Then I would argue CPI is heavier than PPI. Then the fourth one is gross domestic product, GDP. Then the fifth one is manufacturing purchasing managers index, that's PMI. Then the sixth one is trade balance. The seventh one is retail sales. Then the eighth one is unemployment rate. Now, ahead of the first three, so that's FOMC, NFP, and CPI. If that's the US dollar on Wednesday, Friday, etc., then those days, ahead of the days, so for example, NFP, we have it on Friday, then on Wednesday, New York, and Thursday, those are generally days where you want to trade a different pair, so a cross pair, and not a dollar pair. So same for this week, we had CPI on Wednesday. So Monday, Tuesday, and Wednesday, we want to trade a different pair, so a cross pair, not the US dollar. Now, CPI for the euro, GBP, whatever, besides the dollar, is doable. It's doable. It's more manageable than the dollar because the dollar is obviously the world reserve currency, so it will have a heavier impact. Now, if we know that there's CPI on Wednesday, so there's CPI on Wednesday for the dollar, for the US dollar, then on Monday, Tuesday, and Wednesday, we want to trade a cross pair. So we look at the news drivers first, and then we see right here, on Tuesday, we have retail sales. Retail sales is the seventh news event on this list. So it's the seventh highest volatility. Now, above that is an interest rate decision. That's the first. That's at the first. And then right here, we have trade balance. Now, where will the highest amount of volatility for that week for GBP come in? That interest rate decision, it's at number 1. So if we know this, we know, all right, here we can get a quick scalp, we can get in and out, but we can't hold for the entire week because at Thursday, that's where the majority of the move will likely happen. Now, of course, as we know, news is just manipulation. So there will be some sort of sell side liquidity taken, buy side liquidity taken, and then the real move, right? We know because of our high time frame, our execution, etc., we don't really have to pay attention to that because our entry will form. Right here, we came off of a weekly PD array, so we came off of a weekly order block. Monday, nothing happens. There is no news event on Monday. Again, you can ignore the My FX book sentiment. That's, I don't know what that BS is, but just ignore it. And then I like to mainly look at the high impact. So every news event that I mentioned, the 8 news events that I mentioned, you want to be looking at those. So on Tuesday, there is a news event. I know on Tuesday, there is a news event. All right. On Tuesday, I might be able to perform a quick scalp. Why a quick scalp? Well, Thursday is the majority of the news, is the heaviest news. So the most volatility will come in at Thursday. All right. Right here, we are coming off of this weekly order block. We have our displacement here. What's this? At 8 a.m. There's a move into this fair value gap and a new displacement higher. This move is a move you can capitalize on, right? All right, perfect. What happens after that? Wednesday, CPI for the US dollar. Nothing much going on. All right, perfect. What happens on Thursday? We have our ST created on Wednesday. We have our new fair value gap. This is why I chose GBP Australian dollar. This is why I said I wanted to trade GBP pairs and Australian dollar pairs, because there was also some news on Australian dollar. Now, this is what led me to enter this. And then on Friday, this is what led me to use or to take another entry, because we had more GBP news as well. And those news events, those news event days, those are the days where the highest probability entries will form. So trade on a day, and that's the bottom line, right? You want to trade on a day where there is one of the 8 news events. Now, if it's the US dollar, again, you want to avoid the first 3. So that's avoiding FOMC, NFP, and CPI. And that's the same protocol, right? That is, CPI is on Wednesday. All right. Monday, Tuesday, Wednesday is for the crosses. Afterwards, we can take a look at the dollar if it agrees with another news event, etc., etc., etc. All right. So let's get into some examples as well. So I want you to understand this is the process, right? News drivers, looking at a strong currency, a weak currency, pairing them, that creates your pair, then getting to a clear draw on liquidity. If you can't get to a clear draw on liquidity on those futures currencies or on that pair, then you seek another one. Maybe there's another one with the news drivers. Wait for volatility. Wait for those days and then trade them. So the higher the news event, so this is a number 1 news event, right? Even if there wasn't necessarily any news right here, you could have still traded this, because that's the same as after CPI. There's huge volatility in the market. So after CPI, the next day, there is still some volatility of that news event in the market, so you can still trade it. So we need to always trade around news events. And I know this this video will be a little bit confusing at first. That's why we are going over a few examples, and that's why I'm posting this one on Saturday and not on Sunday, because then you have the time, hopefully this weekend, to go over this yourself as well. All right, let's take a look right here. I have a few examples. The first one is Euro JPY. Obviously, we had the example of thingy right here, GBP Australian dollar, but let's grab this one right here. Now, there's 2 major moves that I liked. And again, we could do a top down right here real quick. We had this daily fair value gap. Then what is it? We had this there's a little wick right here stinging into this 4-hour order block with the fair value gap at London right here. All right, we know this. Let's take a look at the economic calendar. What happened on these days? And we are looking at euro and yen. Let's see. Show me everything. How do I? Euro and JPY. Perfect. Not perfect. All right, there it is. All right, so on the May the 8th, we had JPY, we had medium news. So we had some policy meeting minutes right here in the For me, that's in the middle of the night. So that's after Sunday open. And that's what you'll see a lot with the Australian dollar, with the New Zealand dollar, etc. You'll see a lot of news events that happen for us in the middle of the night or in Asia session. And then London becomes a very attractive session. Not necessarily because it's London, but because that news event happened and now London will execute on those news events. All right. So right here, we have that news event, right? We have it. It happens at, what is it? 1:50. That's for me around 20:30. Let's say 20:30 right here. All right, perfect. Then we have the manipulation because we had a news event right here. And then we have a real move. And that's all because we had a news event. So on that day, there will be more volatility. All right. And if we take a look at the second one right here, we had a little bit of balance of trade right here on Tuesday for France, but nothing really on the charts. All right, perfect. So we wait a day. Then here on Wednesday, ahead of London session, what do we have on Wednesday? We have CPI for Germany. Now, again, this is all for the euro, right? So Germany, France, whatever country it is, if it's in the eurozone, then it is tradable. So right here we have a red impact, a news event CPI for Germany. So on that day, there will be more volatility. So on that day is a day we could trade. Of course, news drivers and the price should agree. So right here, we have a clean order block on the 4-hour. Our higher time frame could indicate, all right, we are going lower. Perfect. Now, next thing for us, news drivers, yes, they are agreeing. All right, perfect. Then we might see some manipulation here in London, and we could see a real trade right here. And that's exactly what we got, a big drop right here, etc., etc. All right, now let's look at some more examples as well. Euro, Australian dollar is one. Let me see. This one was interesting as well. This one was, of course, the same as well for coming off of the weekly PD array right here. We had some ST. We had a right here, entry targeting order block right here with this fair value gap that was really clean. All right, so let's take a look at the calendar for Euro Australian dollar. Australian dollar. All right, then let's look at this one, the 4th of May and the 11th of May. So the 4th of May right here. Let's see. All right. Here we have a balance of trade, a high impact news event for the Australian dollar. On which day? Thursday. So on Thursday, we also had a daily fair value gap right here, a daily fair value gap. Now notice how this day didn't really reject away just yet. It is respecting it. It's closing below this fair value gap, but it isn't really rejecting it yet. Then what happens on the news event? The news event causes this spike up, previous day high sweep into the fair value gap as well, and then the real drop off. Now, right here, we have the perfect real entry. Not because, of course, the price agrees, not necessarily because of the London, but all because of the news event. And that's what we need to understand. This news event that will lead you to that low resistance liquidity run. You see how fast price delivers on these news events. Same here. We had, let's take a look right here. What is it? It was the 11th of May. We had Euro speech on this day. So I think the day before we might have had something as well. What was it? Oh yeah, we had CPI. Sorry, this, by the way, this is the 10th of May. All right. Then right here, we had Euro. We had the speech. And a speech, ECB speech, of course, very important as well. So you can see this as a sort of FOMC speech for what's happening in US dollar. It's kind of like the same. So right here, this is a day where high volatility is going to be. Same for Friday. Friday didn't deliver as much as Thursday, but these are days where we want to get involved. Now, let me take a look right here. This is the last example I'll give you, and then I have a few more, and you can check them out for yourself. Australian dollar, New Zealand dollar. We had one on the 8th of May. Let me see. All right, perfect. The 8th of May. Right here, we came into this 4-hour order block and we continued lower. Now, at which time did we come into this 4-hour order block? Australian dollar high impact news event. So everything is based around the news events. Then on the 11th of May, let me see. 9th of May. Yeah, right here. We had this one as well, clean entry. Then we had this one as well on 9th of May. So we had a fair value gap right here overlapping with an order block as well right here for Australian dollar, New Zealand dollar. Then what is happening on the 9th of May? Retail sales, high impact. So Monday and Tuesday are very tradable here because of the news events. So those news events, they lead you to that low resistance liquidity run again. And that's very important. So what I would love everyone to do, if everyone could do it, study these days right here. Australian dollar, the 9th of May, USD Canadian dollar, 28th of March and 18th of April. Those days, I want you to go over those days, look at the news events that happened, and look at the clean moves that happened as well. So all the clean moves, essentially, the best moves will happen based off of news events. That's why I always told you on the dollar, if you take a look at the dollar as well, right here, the dollar, the majority of the news events, this one right here, somewhere around here was also a news event. Maybe even this was a news event. Those news events caused the cleanest moves. They are essentially, they are the reason why these moves happen. So everything is based off of that news event. So you need to use those news events and have an indication of the economic calendar to get to your low resistance liquidity run for the week. And that's very important. And once a drawn liquidity, etc., agrees and price agrees, then you can get involved. High time frame execution. So we have a pretty clear drawn liquidity, I would say, right here for the weekly on the dollar. And on the daily, we could see a delivery higher if we can get some sort of consolidation, and then a push higher would be pretty clean. Now, we can pair the dollar with indices. Indices, of course, this also works. So you look for a news event the next week. Let me take a look at all the USD. So on these days, medium impact, that's not that's not the most interesting day. But right here, we have high impact retail sales. Right here, we have building pyramids, high impact. So on Tuesday, Wednesday, and then Thursday, we have jobless claims. And then Friday, we have Fed Chair Powell speech. Now, Powell speech, hopefully you're done by Friday, because you have Thursday, Wednesday, and Tuesday. Those are all trending days generally. They are known, Tuesday and Wednesday are known to create the high and low of the week. Now, is the weekly profile not that important to us, because we will see it happen whether we know of it or not. But you need to know on these days, Tuesday, Wednesday, and Thursday next week for the US dollar is likely where the cleanest moves will happen, where that low resistance liquidity run will happen. So if we take a look at what happened the past week, right here, we had CPI on Wednesday. Now, again, like I said, US dollar CPI on Wednesday, then these days, Monday and Tuesday, is where you want to trade the crosses. Now, what happened on the crosses? We had Monday Australian dollar and Tuesday Australian dollar high impact. So those days are where the volatility for Australian dollar is going to come in. We know there is volatility coming in on that day. So we are looking at the Australian dollar currency. Let me take a look right here. And we actually had a previous month high right here. Now, there it is. Now, it actually got swept at the CPI. And then these days, because we still had a clear draw on liquidity this high. So what is that saying? Australian dollar still going higher. So you pair it with a weak currency, go over the currencies, find a weak currency, pair it, and then you have your pair. And you know which days you are going to trade it on Monday and Tuesday. So let me see if I've gone over everything. Again, this is the filtering process. And again, I need you to understand, you still focus on one execution pair. That's very important. Ahead of the day, so you'll see me in the Discord as well, you'll see me select multiple pairs, right? I have multiple pairs right here. But for the session I'm trading, so London session mainly, sometimes New York session, I'm only focusing on one pair. The pair that has the cleanest price action just before I do my session analysis. So just when I wake up, I do my London analysis, and I looked at GBP Australian dollar. I saw, in my opinion, it was the cleanest, had the cleanest price action. So I wanted to trade this pair. That way you don't get confused and you're constantly switching around pairs during your session. No, you only focus on one execution pair. So that's very important as well. And again, will you miss moves by doing that, focusing on one execution pair? Yes, you absolutely will, but it won't be as detrimental, because if you're constantly switching between pairs and around pairs, then you might FOMO into a random pair that you haven't really focused on, and you're not that focused on price action on that pair, and then you will lose even more money. And missing moves is not that bad, but FOMOing in is way worse than missing moves, because you're actually losing money. Missing moves, you save some capital, so it's a blessing in disguise, essentially. All right, so I wrote down as well, if dollar is looking bullish until the weekly FEG, paired with a weak currency and find the news drivers. So that's exactly what we did, right? Find the news drivers Tuesday, Wednesday, and Thursday is where majority of the moves will likely happen for US dollar pairs. So all the majors. All right. Crosses, trade them ahead of NFP, CPI, and FOMC, or when the dollar is not clear. So that's when you want to trade the crosses, ahead of NFP, CPI, and FOMC, or when dollar is not clear. Majors, trade them when dollar is clear and use the USD news drivers. So for crosses, you use the cross news drivers, obviously. Again, pay attention. Don't create a false expectation that a trade will always show itself. So on these news days, they have the highest probability conditions on these news days. They have the highest probability conditions of a trade actually playing out, of a low resistance liquidity run. But again, don't create that false expectation that there will 100% guaranteed be a trade that day. That's very important, right? Because there's still probabilities we are working with. We are not working with binary, unfortunately. It would be awesome if we just work with binary, but we are not. We are still working with probabilities. So there will still be maybe a 10% chance that there's nothing happening on the day. And that's perfectly fine. We deal with it. All right. So let me see if I just don't miss anything, because that would be a shame. Yeah, and this, again, like I said, right, study these pairs. And if you see any clean move, so if you see any clean move for example, you see a clean move on the higher time frame, and you're like, all right, I wonder how I could have gotten involved. And then I also want you to study how what news drivers happened on that day or just before that day. What news drivers led to that move? So then you have how could I have gotten involved and what news drivers, and the news drivers that will tell you essentially I could have gotten involved because there's a news driver, etc., and will just boost that confidence. All right. On US dollar, CPI, FOMC, and NFP. So that's for the US dollar. Again, because US dollar is the strongest, etc., and it's a world reserve currency, so it has the most impact. Wait for after the release because it will likely hold it in consolidation. So ahead of US dollar, CPI, FOMC, NFP, those are days you generally don't want to trade, or maybe trade after the news event is released. So, but for other red news days, the day in itself is likely already volatile. Institutions already know the news results before it happens. That's why you'll see clean entries on these days. Like I always say, right? Or I don't always say this, but like I said in the beginning as well, news or institutions, big institutions already have the data that is going to come out. And that's just the world we live in, right? It is not fair, and the world essentially, if you could say it isn't fair, and it is what it is, and we have to deal with it, but we can take advantage of it because we know those days will be volatile. All right, so again, as well, what I want you to do is, if you study days where you look at days where the news drivers are, I want you to go to takeprofit.org and go to the volatility and then the pair. If you go to this pair right here, and we go back to the example we just had, so Euro JPY, and it was this day right here, then we go to the session right here, 2 a.m. candle and the 3 a.m. candle. So this is 41, this is 17. All right, if we take a look right here, 2 a.m., 9 and 20. So this is what I want you to do as well. Compare the volatility. You'll see way more volatility right here because we had that news event. Same right here. You can compare the average volume to the current volume that happened because of the news driver, and you'll see, all right, the day is actually more volatile because of the news driver. So that's something you can study as well. 31, way more volatile than average. All right. So that was it. There's a lot of things to take in. And again, I'll try to make it as simple as possible by getting some sheets as well and sharing the list. I'll put it in the screen right here as well. But again, there needs to be work done on your side. This is the list. This is the list. This is the correct list in the right order. So first interest rate decision, etc. The most volatile will be at the top. Now, again, rewatch this a couple times, etc., etc. If you do have questions for all the Zoom people right here, then please let me know, and we can get to it. If you have questions, let me know in the Discord as well. So rewatch this a couple times. I will touch on this more times throughout the week. We will focus on this because this is how we can get to a low resistance liquidity run. And this is very important for you to understand. And for your trading, it's very beneficial because you can essentially just plan your week ahead. And that's what I always call you're planning your week ahead of time. Is that take profit side just for Forex? I'm not sure actually, but I think there's similar things for indices as well. So if you search something like indices volatility, so S&P 500 average volatility, you'll find something for sure. Let's see if it has it. S&P 500. Let me see. No, but I'm sure there's something similar. All right, so thank you all. Again, study these days right here and share the markups with me if you do feel like it. And then I'll touch on it tomorrow as well and throughout the week and throughout MMP, because I'll take you through my routine, and this is my routine. So, all right, thank you, and I'll see you at the next one. All right, thank you, everyone.